Hello everyone and welcome to AUSTRAC's webinar on Australia's National Risk Assessment of Money Laundering, Terrorism Financing and Proliferation Financing. My name is Chris and my co-presenter here is Haley. We are all part of AUSTRAC's Industry Education and Outreach team. We will be taking you through the findings on risks posed to Australian sector, such as yours, through money laundering, terrorism financing and proliferation financing. For the remainder of this presentation, I will refer to this as ML, TF and PF. AUSTRAC acknowledges the traditional custodians of country throughout Australia and their continuing connection to land, sea and community. We pay our respect to elders past and present and extend that respect to all Aboriginal and Torres Strait Islander people joining us. Thank you for taking the time to join us. The purpose of this session is to provide you with a contextual information on the scale and impact of the risk associated with ML, TF and PF. This is the information you need to meet your key compliance obligations under the AML-CTF Act. Understanding these risks is crucial in implementing effective systems and controls to protect your business and the greater community from criminal abuse. This webinar highlights some of the key findings of the national risk assessments that may be relevant to your business, but we won't cover all the information included in the national risk assessment. We encourage you to read this for a more fulsome understanding of money laundering, terrorism financing and proliferation financing in Australia, as well as the specific vulnerabilities that may be relevant to your business's ML, TF and PF risk. This webinar should not replace or form part of your AML CTF risk awareness training program. This July, AUSTRAC published 2 new risk assessments, one on money laundering in Australia and one on terrorism financing in Australia. In December 2022, AUSTRAC published a national risk assessment on proliferation financing. Proliferation financing is when a person makes available an asset, provides a financial service or conduct a financial transaction that is intended to facilitate the proliferation of weapons of mass destruction, regardless of whether the activity occurs or is attempted. These risk assessments are an important contribution to Australia's money laundering and counter-terrorism financing, also known as AML-CTF regime. They bring together insights from across Australia's national intelligence community, law enforcement and regulatory agencies, private sector stakeholders and international financial intelligence units to provide a contemporary, consolidated picture of Australia's risk environment. They also highlight where efforts to combat money laundering, terrorism financing and proliferation financing can be improved. AUSTRAC completed these national risk assessments as Australia's financial intelligence unit. However, we would like to acknowledge over 50 partner agencies who made important contributions to the risk assessments, including law enforcement, intelligence agencies, regulators, social services and taxation authorities at the Commonwealth and state level. When it comes to developing or updating your business's money laundering and terrorism financing risk assessment, you must take into account AUSTRAC's guidance and feedback that is relevant to your business's money laundering and terrorism financing risk. This includes relevant information from the national risk assessments. The information in the national risk assessments and the webinar is important to you to consider as, firstly, it may alert you to risks that you are not aware of. Secondly, level of risk are continually changing, as are the crimes that generate illicit funds from ML, TF and PF activity. Thirdly, the risk assessment provide national and sector-wide views of ML, TF and PF risk based on information not available to individual businesses or organizations. Lastly, national or sector-wide MLTF risk may impact on the particular MLTF and PF risk faced by your business or organization. Throughout this webinar, you should consider how the information presented is relevant to your business. I'll now hand you across to Haley for the next part of this webinar.
Thanks, Chris, and hello, everybody. We'll begin this session by discussing the money laundering national risk assessments. Money laundering is a major component of almost all criminal activity, and criminals continue to identify and exploit new opportunities to launder illicit funds through innovation, experimentation, and adaptation. Australia has a global reputation as a large, robust, and stable economy, which makes it an attractive destination for foreign proceeds of crime. Our strong trade and investment ties also create vulnerabilities that are exploited by criminals. For example, asset classes that attract a high volume of international investment, such as real estate, are highly desirable as a means to transfer and store wealth. In the context of this risk assessment, money laundering threats refer to predicate crimes that generate illicit proceeds, which are then laundered in, from, or through Australia. A predicate crime is any offence that generates proceeds of crime. You will see on our next slide a list of predicate crimes which have been rated high, medium, and low. An explanation of these ratings is currently on screen. With a high threat rating, there is a high volume of illicit funds generated that require laundering. Money laundering methodologies are highly varied, or there is a high level of involvement by serious and organised crime groups and other criminal entities. With immediate rating, a moderate volume of illicit funds are generated that require laundering. Money laundering methodologies are somewhat varied, or there is some level of involvement by serious and organised crime groups and other criminal entities. Finally, with a low threat rating, these are characterised by a low volume of illicit funds generated that require laundering, and minimal variety of money laundering methodologies being used, with little to no involvement by serious and organised crime groups and other criminal entities. As well as ratings, on the next slide, you'll also see an outlook assessment for each threat, which looks at the next 3 years. An explanation of each outlook rating is included on the next slide. 3 of the highest money laundering threats identified in the risk assessment are illicit drugs, tax and revenue crime, and government-funded program fraud. The domestic illicit drug market is assessed as posing a high and increasing money laundering threat. Australia's illicit drug market generates significant volumes of criminal proceeds that require laundering. Well-established money laundering methodologies continue to persist, such as the structuring and use of cash, the use of third-party accounts, and the use of money mules. There may be red flags you can include in your transaction monitoring program or employee risk awareness training to identify these methodologies. Tax and revenue crime also poses a high and increasing money laundering threat. Many of the channels and criminal methodologies that are used to commit tax and revenue crimes are also used to launder the resulting criminal proceeds. For example, professional service providers, such as lawyers or accountants, are used to establish offshore and onshore business structures and banking arrangements to hide transactions, assets, and beneficial ownership. This is why reporting entities must identify the beneficial owners of their customers and assess the money laundering risk that they pose. Government-funded program fraud. poses a high and increasing money laundering threat. Like tax and revenue crime, money laundering techniques are essential to layer and reintegrate criminal proceeds generated from government-funded program fraud. Fraudulent activity often involves inflating or falsifying invoices, overclaiming for services delivered, using stolen personal information to claim additional benefits, using people with no criminal record to act as company directors, and illegal phoenixing. Phoenixing occurs when a new company is created to continue the business of another company that has been deliberately liquidated to avoid paying its debts, including taxes or employee entitlements. Identifying your customer's source of funds and source of wealth provides you with useful indicators on whether a customer's funds or wealth may come from criminal activity and will help you assess and manage your risks. In collaboration with the National Disability Insurance Agency, NDIS, AUSTRAC released a financial crime guide in 2020, which includes indicators that can help you identify, monitor, and report suspected fraud against NDIS. Now back to Chris, who will discuss vulnerabilities.
Thanks, Haley. Money laundering vulnerabilities exist across multiple levels, including national, sectoral, and channel levels. The risk assessment assigns a risk rating for the overall assessment of money laundering vulnerability for the number of sectors and channels. I will now speak to you about the bullion sector specifically. The risk assessment assesses bullion dealers as posing a medium and increasing money laundering vulnerability. An explanation of these ratings is on the screen. Criminals buy and sell precious metals such as gold bullion throughout complicit and non-complicit dealers to launder money. Bullion dealers are increasingly being identified in criminal investigations by Australian authorities. In some instances, individual dealers are strongly linked to known or suspected criminal and/or criminal groups. The assessment identified several vulnerabilities for this section, including, firstly, high exposure to cash transactions, with many bullion dealers operating cash-intensive business models. Secondly, in relation to the feature of bullion, bullion is easy to purchase with cash, easy to transport, and can be difficult for authorities to trace. Thirdly, the provision of bullion refining services for gold sourced from Australia and gold ore mined in other countries. This can make it difficult to determine the legitimacy of the source, particularly after the gold has been refined. Exploitation by money mules, which helps criminals distance themselves from transactions and reduce their chances of detection. In this scenario, criminals provide a third party with funds to buy gold bullion, and the third party uses their own identification details to buy the gold bullion and hands it to the criminals. In other cases, the third party sells the gold bullion and transfers the proceeds to the criminal. In addition, given the current economic uncertainty, criminals and also legitimate investors will likely continue to regard gold bullion as a relatively stable asset, which will increase its attractiveness. This being the case, the assessment found that bullion dealers will likely pose an increasing money laundering vulnerability over the next 3 years. This increase will be driven largely by criminals targeting the sector for the reasons I have mentioned. The risk assessment identified that the bullion sector submits relatively low number of SMRs, and the number submitted varies greatly between individual reporting entities of a similar size and scale. Reports often lack detailed information about the grounds for suspicion. Based on the findings of this assessment, AUSTRAC would expect to see more SMRs being submitted. You should use the information provided in this assessment to review and update your own risk assessment and the processes and controls you have in place to manage your business's AML/CTF risks. This may include updating your transaction monitoring program and providing training to your staff to help them understand these risks and identify suspicious transactions. Importantly, you should also be considering whether you are meeting your reporting obligations. As I mentioned, SMR reporting is very low in the bullion sector. AUSTRAC ran an education campaign in 2022 that was heavily focused on SMR reporting. And since then, we have also published an SMR e-learning module. There is also extensive guidance available on the AUSTRAC website. I encourage you to review these and share these resources with your staff to ensure that you understand your reporting obligations and are submitting SMRs when suspicious behavior or transactions occur. I will now discuss regarding bullion and precious metals, physical or securities transfer of value. The use of bullion and precious metals as a value transfer mechanism is assessed as high and stable money laundering vulnerability. Domestic criminals buy and sell bullion and precious metals to launder money as they have a high intrinsic value, can be purchased with cash, and provide anonymity when transferring value. The buying and selling of bullion and precious metals allows criminals to easily invest, transfer, and conceal the proceeds of crime with a low risk of detection. Because bullion and precious metals are multi-purpose assets that can be used as a store of value or a value transfer mechanism, they have a number of features that make them attractive to criminals. These include: bullion has universal acceptance in extensive domestic and global regulated and unregulated markets where price is easily established. Bullion is relatively easy to acquire. Bullion is reasonably easy to store, conceal, or to transport. Bullion has a status as a safe haven investment, meaning that the benefits of these assets to legitimate investors equally apply to criminals. The use of bullion and precious metals as a value transfer mechanism will continue to pose a high money laundering vulnerability. This will be driven by strong international markets for these goods, their intrinsic value, and their attractiveness as a hedge against current economic uncertainty. So we have talked about the vulnerabilities for each sector and some of the money laundering methodologies observed. Sometimes it's hard to picture how these methodologies play out. So to give you a better picture, we'll now take you through some of the case studies detailed in the risk assessment. Our first case study relates to the use of a money mule to make cash deposits. An individual extensively recorded a law enforcement intelligence for involvement in drug trafficking activity, deposited more than $200,000 in cash to the bank account of a bullion dealer over 2 days. Law enforcement discovered that this individual was in fact incarcerated at the time of transactions. This led them to believe that a money mule had made the deposit using the account holder's details. Our next case study relates to fraudulent NDIS providers. The AFP, in partnership with the National Disability Insurance Agency, AUSTRAC and Services Australia, conducted an investigation into several suspected fraudulent NDIS providers based in Western Sydney. The AFP arrested 6 people allegedly involved in crime syndicate and are pursuing criminal prosecutions in relation to over $4 million in allegedly fraudulent NDIS claims. Over $2 million in suspected tainted assets were seized during the search warrant, including 8 kilograms of gold bullion from a vault at a secure premises, worth approximately $600,000. As with money laundering, Australia is committed to ensuring the country and its financial system is resilient in preventing the financing and support of terrorism both nationally and overseas. The terrorism financing in Australia National Risk Assessment is Australia's second comprehensive national risk assessment focused on terrorism financing, with the last report of this scale being completed in 2014. The risk assessment brings together insights to assess the risk associated with the methods and channels identified to finance and support terrorism activity. In November 2022, Australia's national terrorism threat level was lowered to possible. The Director General of Australian Security Intelligence Organisation, that is ASIO, noted that espionage and foreign interference now replace terrorism as countries' principal security concerns, with the number of violent extremists who have both the intention and capability to undertake terrorist attacks in Australia having decreased. Again, back to you, Haley, to cover the final part of the webinar.
Thanks, Chris. The terrorism financing process generally involves 3 distinct stages: raising funds through donations, self-funding legitimate businesses or criminal activity, moving funds through a terrorist network, organisation, cell or individual, or between such entities, including storing funds, using funds for direct, operational, and indirect organisational costs associated with terrorist activity. You'll see in the table on this slide there is a list of channels and methods used for raising and moving funds. Self-funding remains the main method of ideological and religious terrorism financing in Australia and is assessed as a high risk, which has remained stable since 2016. It generally involves very low to low value transactions, for example, between $5 and a few $1,000s. This and the fact that funds are almost always sourced through legitimate activity makes it very difficult to detect and distinguish from ordinary behaviour. In terms of moving funds for terrorism financing, the small scale of terrorism financing in Australia and the use of less sophisticated methodologies mean that few channels and methods appear to be exploited. As we said earlier, terrorist financiers prefer readily available and proven methods to move funds, such as banking, remittance, and online payment services, over complex schemes. As you can see on the slide, the overall risk rating of precious metal traders, including gold bullion, being used to move and store funds for terrorism financing is assessed as low for religiously motivated violent extremism and very low for ideologically motivated violent extremism. In December 2022, AUSTRAC published a national risk assessment on proliferation financing. The results of this risk assessment found that Australia is primarily targeted by state-based or linked procurement networks that wish to exploit a range of sectors to export restricted, sensitive, or dual-use goods and knowledge. Procurement networks targeting Australia operate on behalf of North Korea and Iran, as well as other countries of proliferation concern. Other significant proliferation financing threats include the use of third country nationals to facilitate proliferation financing and evade sanctions, and the exploitation of Australian citizens to source and export sensitive technologies and knowledge for use by actors of proliferation concern. All reporting entities must have risk-based systems and controls in their transaction monitoring program to identify and report suspicious matters. This includes monitoring for suspicions that individuals or businesses are attempting to avoid Australia's sanction laws in connection with the provision of a designated service or a request to provide a service. I encourage you to take the time to read the Proliferation Financing National Risk Assessment for a more fulsome picture of the threats and vulnerabilities identified and how these may relate to your business. Again, you must take into account AUSTRAC guidance and feedback that is relevant to your business's money laundering and terrorism financing risks when developing or updating your business's money laundering and terrorism financing risk assessment. AUSTRAC recently published updated guidance on taking AUSTRAC guidance and feedback on money laundering or terrorism financing risks into account to help you assess your money laundering and terrorism financing and proliferation financing risks. The updates include the range of guidance products AUSTRAC publishes on these risks. We've discussed a number of observations made during the risk assessments regarding low SMR reporting from this sector. Having a robust AML-CTF framework in place, including a comprehensive risk assessment and effective transaction monitoring program, will help you mitigate and manage your money laundering, terrorism financing, and proliferation financing risks, and protect your business and customers. I encourage you to take the time to read this guidance, as well as the national risk assessments, to ensure you understand your business's risk assessment obligations, your money laundering, terrorism financing, and proliferation financing risks, and the relevant AUSTRAC guidance and feedback that you need to consider. We'd like to thank you all once again for joining us, and we hope you found this session informative and valuable. To access the national risk assessments or to find out more about your obligations, visit our website at www.austrac.gov.au.